Good evening, FS Insight family and community. Today is Tuesday, August 22nd after the close, and this is our Macro Minute. Now, as we move through August, we've been cautious, as you know, partly because it's August and partly because when markets are so strong through July 31, August tends to be a bit worse. But we're already down 5%. And as you know, we had talked about how we think markets are going to bottom sometime between Monday and Jackson Hole, which is this Friday, August 25th. And there are signs emerging. And I believe that Wednesday morning is going to be the first window really where I do think you want to add risk. But I'm actually mentioning this very timidly because part of me would say, why don't we just wait till Friday? Because then we get the NVIDIA earnings out of the way and we get Jackson Hole out of the way. But the reason I'm suggesting we start Wednesday, which is 2 days before that, is that I do think there's a decent shot NVIDIA is going to reinvigorate market sentiment towards tech and AI. So you're going to miss that opportunity if you wait until Friday. And of course, we think that given how much interest rates have moved up, I think it's going to be quite easy for the Fed to communicate something that actually causes rates to fall. And as you know, that actually creates a linkage for stocks to start to rise. So I'm making a calculated but very timid bet that it's better to buy stocks Wednesday than to wait until Friday. Before I dive into some of the rationale for that, because there's 4 reasons, I want to alert you to an important webinar next Wednesday, August 30th at 2 p.m. Eastern Time. We're very excited to host a webinar with the CEO of Cadence Design Systems, Anirudh Devgan, and Dr. Anirudh Devgan. And Cadence is one of our granny shots. It's been on there for since the start of the year. They aren't as well known as other AI companies, but this is a critical company and a very highly profitable company sitting in the epicenter of AI. They make EDA software, but they're also making systems. So this company has really cleverly positioned itself as one of the most important providers of some of the key tools for AI. And so I would encourage you to tune into this webinar at 2 o'clock. And really hear the story. And again, it's one of our granny shots. So we have 4 reasons for why we think Wednesday's a better day to add risk than to wait until Friday. The first is that I do think there's a decent shot stocks are going to rally after Fed Chair Powell's speech. This is all the market reactions from all the Jackson Hole events since 1998. But I do want to look at just the last 20 years because the first 5 took place during a dot-com boom and bust, but really during a bear market. And I want to zoom in on something that when markets in the last 20 years are down in the 2 weeks into Jackson Hole, and we're down 2.2%, so we're kind of on cue. 1 month later, stocks are higher. 1 week later, 86% of the time. So it looks like it's going to serve as a pivot point for stocks to rally from Jackson Hole. And here's a scatter of all those years. The x-axis is your performance into Jackson Hole, and the y-axis is 1 month gains. And you'll see that if you had positive performance into Jackson Hole, it's still inversely correlated. You know, the less up you were, the better the market reaction. And if you were down into Jackson Hole, which is the case here, the more you're down, the better the bounce. So again, I think this is pointing to the odds favoring some sort of reflexive rally post Jackson Hole. And you might be haunted by last year because last year, this is when Jackson Hole took place and it marked a local top for equities and the stock market fell basically 20% into the October lows after a speech. But recall there were a couple of things going on. One is the Fed felt very behind on inflation and so was extremely nervous. And So he wanted everything to be tightening, including stocks going down. And secondly, the stock market had already failed at the 200-day moving average. So I think the setup is very different this time. A second reason we think stocks are going to do well post-Jackson Hole is that some of the things supporting sticky inflation are really starting to wither away. And one of them is the fact that new hire pay is shrinking. I mean, this article in the Wall Street Journal points out that half of the jobs have declined in terms of average pay. Now, think about that. Many people said inflation is sticky because wages are sticky, but apparently they're not that sticky. And of course, we come back to car prices are unsustainable. There's actually a big pickup in delinquent loans, maybe the worst since 2008. But you have to keep in mind what this means. Used car prices are the second biggest contributor to CPI. And this is the trend line since 1997. I mean, look how far we are above the trend line. You have to go down to 150. That's a 30% drop. I mean, used car prices and car prices could tank. That's not inflation, that's deflation. Another reason has to do with the long bond. Mark Newton talked about this, and he thinks it's going to take a couple more weeks to play out. But I mean, the 10-year, the TLT, which is shown here, is basically at a level that potentially is where you could see it reverse. And a rally there would be bullish for stocks as well. So maybe. And then finally, next week, we have some pretty decent slate of economic activity. This is all of the key economic reports next week. The few I want to highlight is Case-Shiller home price. We get the JOLTS, which is job openings, the 29th. We get the PCE on the 31st, which is Thursday. And then that Friday, we get the jobs, a non-farm payrolls report, and ISM manufacturing. I think overall, the balance of these things should actually be dovish for the Fed, meaning I think it shows inflationary pressures are ebbing, and that would be another reason for stocks to rally. So again, I'm going to timidly suggest the time to add risk is actually tomorrow and not waiting until Friday, which is Jackson Hole. Thanks for listening, and have a great day.